So we're ready to go. So as I said, this is the Fireside Chat, US in focus, snapshot perspectives on key priorities and future trends. So I'd like to welcome our panel, Nicola Longmuir, CEO of AvatarUX, Matt Heiman, the Game Day founder and CEO, and old colleague of mine, Brad Allen, Senior Analyst, Eilers and Krejcik.
Hello, everybody. Welcome to the panel. I'll just let them introduce themselves very quickly, starting with Nicola.
Hi, everyone. I'm Nicola Longmuir, otherwise known as Nikki. I'm CEO of AvatarUX. We're a small boutique games studio producing fantastic games. We've got a heritage of distributing content in the European market, and we're moving into the US market very imminently. So hence why I'm here to talk about casino with a US focus.
Hi, I'm Matt Heiman, founder of the Game Day. And the Game Day is a sports media company in the US. Was founded just post legalization of online sports betting, and kind of our mantra is to move sports fans to sports bettors. And so we're extremely active on social media and also have a pretty robust publishing on our own website.
Yeah. So as you can tell, we've got sort of half casino, half sports, so we'll try and cover both today. But I thought it'd be interesting to start with PointsBet, DraftKings, Fanatics, since that's the topic du jour in the US at the minute. So Matt, I guess I'll start with you. Who do you think's getting the deal done if you had to handicap it?
Oh, I mean, it's what a difficult question. What an opener. You said we talk about it. You didn't have to tell me I'd have to pick a winner.
I'll tell you. I'll start.
Can I just check the line first?
I think ultimately Fanatics are going to get the deal done.
Okay.
Because DraftKings have now got maybe 9 days, I think, to get a firm offer on the table. Because PointsBet shareholders are going to be voting on the Fanatics offer on June the 30th. And they basically said you should accept that. So DraftKings obviously that's their deadline to get an offer on the table. And I think it's going to be quite difficult to do all the due diligence on the tech, get everyone on board and get a firm offer on the table. And especially if Fanatics can then say, all right, we'll match the offer or we'll increase our own offer. And I think that's just the more straightforward path. But yeah, what do you think?
I guess I think there's three things probably to solve for. The first is who are the big shareholders in PointsBet? And right now, if there's any interest from like an arbitrage, it's at a hedge fund saying actually this is the start of the race, there's more to be happening here, they could get a stake and be the decider. And so I think that probably number one, need to think about what's happening in the free float in the stock market at the moment. The second one is probably, if you look at the previous acquisition that DraftKings made in this space, that didn't necessarily come at the best time, and the stock price went down, let's call it 80% from there. So probably an all-cash offer is pretty attractive. And then the question would be, does DraftKings have the cash to do an all-cash offer based on its track record? And probably the third thing would be Fanatics is a private company, and so it doesn't have the same outside shareholder pressure that DraftKings would be facing. But oddly, one of our investors is also the most significant investor behind the founder in Fanatics. And so, yeah, I think it's just going to be interesting to see, how deep their pockets are as a private company.
Yeah. Yeah, and I think they've got more than $1 billion on the balance sheet, so I think they can certainly afford to get there if they need to. Nicola, I don't know if this is your area of expertise, or if you want to.
I mean, it's not really, but I mean, it's really interesting to watch how it's all unfolding. It's almost like an episode of Succession, and coming into Gazump at the last minute is really an interesting, tactic. But I think what it's showing is that the consolidation within the US market is going to continue and is only going to be something that becomes more and more prevalent as we go forward.
Yeah, I really would not be surprised if Jason Robbins had watched Succession before making this offer, because it has all the hallmarks of
Totally, it makes for a really compelling story, and it's something that people are really, really interested in, and it's it's very, very dramatic.
Yeah, I mean, to me, it makes a lot more sense, the acquisition for Fanatics, obviously, just to rather than have to build an Amelco product up for the next 2 years into something that's even close to as good as DraftKings or PointsBet is right now. If DraftKings just acquire PointsBet instead, it does make Fanatics go down that 2-year-long road or whatever to get product parity. And as we were saying earlier, there's 2 companies maybe that can feasibly challenge DraftKings for number 2, and that's Fanatics and Bet365. And if you can set one of those companies back by 2 years, or even a few months, if you have to go through a whole M&A spiel over the next 6 months, then that's probably worth a fair bit of money in market share down the line.
I guess for us as well, like more broadly than just that transaction, is it might signal the bottom kind of interest in M&A and consolidation in the US market.
Yeah. And that's kind of, consolidation is kind of relevant for casino as well, because what we see in the US is pretty much 4 casino operators who have any kind of share. So as a supplier or as someone who's trying to get into that market, does that make it more difficult? Because you know your audience, you've got 4 people you've got to go sell to, but is it difficult because if you're not in the door, you're nowhere?
Yeah, I mean, it's difficult. It's difficult for emerging suppliers or smaller suppliers in the market to first of all, enter the US market under their own steam. So it's a lengthy process. It's a costly process. It's very intrusive as well. So I think, one of the ways, to get into the market is to, there's different ways to look at it. You can go under your own steam and get licensed, but obviously, as the states open up market by market, then, there's license implication and cost implication there. However, the other way to kind of look at it is by partnering with someone who's kind of globally recognized and is already recognized in the US market as a distributor. And that's what, as a smaller supplier, emerging and trying to break into the US market are doing. So we are working with a partner who can aggregate our content, who already have established relationships with the Big Four and all the operators across New Jersey market, Michigan, and the 6 states that are open for casino at the moment. So that is allowing us, to kind of get a foot in the door. The main way really is, to showcase the product and have a really great quality product to get out into the market. I think the US market is changing massively. There's been a huge heritage in kind of land-based going to online for casino, but there's a new wave of players who really want to see new content out in the market. They want to see innovation. They want to ultimately have a product there that is entertaining, and that's what some of these smaller suppliers are trying to do, such as ourselves and others in the market. But as I say, it's a very difficult road to take.
Yeah. So why take it? Why not go for easier pastures, perhaps?
It's the opportunity. I mean, being there early as an early adopter into the US market is, for a small supplier is, it's by no means the golden ticket. But I think you've got to be there early, and that's the strategic approach that we've taken as a business, is to get foothold in the market early. We all know that the US market is going to open up for casino, and we're going to see that opportunity only increase. I've been around in the industry for a long time, giving away my age a little bit, but I've been around since the dawn of the European kind of online casino revolution, and I've seen the regulation that have come into play, and how how difficult it has become from a supplier point of view, and that the regulations that have come in have almost been prohibitive to new content in the market, whereas the US is, I would say, from a casino and a regulatory point of view, quite a wee bit behind that, and there's still some huge opportunity there to get new content out into the market. Yeah,
so you want to be expanding there while it's live in 5 states rather than 25 and it's saturated.
Exactly, and if you can partner with a distributor who has a strategic aim of entering new states as they open up on day one, then all the better, because you can then follow on that kind of basis.
Yeah. I mean, on legalization of casino, do you talk to your partners, any regulators in the US, and is there any understanding of why it's been so limited beyond the 4 or 5 states so far?
I think there's, it's a huge talking point, and I think with the US kind of black market, if you like, the growth there, there was a study done by the American Gaming Association to show that there's a huge amount of revenue, around 300 billion being wagered annually in the black market. And from a regulatory point of view, I think it's inevitable the states are going to open up, and probably, very rapidly over the next few years, which obviously, given the population and the size of the opportunity is absolutely huge. So there's really from a regulatory point of view, it makes sense to, from a taxation, to reap the benefits of taxation, to make sure that, regulation brings safety for players, and players can, be entertained in a very safe environment compared to the black market. So I think it makes sense that, there's a huge, obviously, one of the big drivers is the huge amount of revenue that is being lost to the grey and the black markets.
Yeah, Matt, do you still see the black market as an issue on the sports side of things?
Yeah, I do. I think particularly, you're right. In casino, there's only a few states that are legalized, but even in sport, we're approaching 30 states that are legalized, but there's 3 big ones that still aren't. And so I think right now it sounds like whether it's a political decision or voters, they would prefer to have, it's not a question of people online betting, it's a question of people online betting legally. And either the legislators would prefer to have illegal betting, or the constituents, who probably don't understand the decision, but certainly you'd think the legislators would understand the decision. And right now they'd rather have, frankly, problem betting than regulated betting, and that's a decision that they're making. So I think there's a lot of wood to chop. You're probably talking about half the US sports market still can be cleaned up. And then I think it'll probably come once people understand the difference between one online bet that's happening anyway and a better bet that would happen if it was regulated.
Yeah, I mean, I think it's a deliberate ploy by offshore black market operators to blur those lines as much as possible, because they don't want people to know this is the illegal option. So they'll, they're in Google search, they're in app stores, advertising, and I think just trying to spread as much confusion as possible. And I guess it's at some point it's up to the regulator to sort that out, or regulators. Also, on that note, the current status quo is kind of to the benefit of these sort of DFS plus operators, who I'm sure you're familiar with, the likes of PrizePicks, the likes of Underdog. And, I hear a lot of sort of pushback from operators going, how can they get away with what they're doing currently? So, I mean, what kind of future do you see for someone like Underdog, for someone like PrizePicks? Can you see them making that transition into sports betting, or is there going to be too much pushback because of, are they taking illegal bets currently? In some states, that is the case. So yeah, do you see a future? Do you think they can make that transition the same way that FanDuel and DraftKings did into becoming good sports betting operators? Do you think PrizePicks and Underdog down the line can make a similar transition?
Yeah, I do. I think the advantage that these companies have, one of our backers is Bruce Linton, who basically legalized cannabis in America and made billions out of it. And the difference between our business and his is you can collect a database, right? So, I don't know, your local dealer maybe has a few numbers in his phone, but it's not the same as having several million people on your platform betting semi-legally all the time. And so to convert that data, imagine everything goes bust or gets regulated one day really severely, but you manage to pull your customer base out. That would be an incredibly valuable asset. And it's probably a lot of, the kind of points bet piece is heading that direction too, around what operators will be able to keep. Whoever wins will be able to keep and not keep. But yeah, we see it as, these guys are building valuable businesses, probably more valuable when they move to a regulated market than even today.
Yeah. Yeah, I mean, I've seen some of the revenue numbers that PrizePicks are doing, and it's be like a top 5 sportsbook operator, and then obviously Underdog's getting investments from the likes of Blackstone or BlackRock, one or the other, sort of $1 billion valuation. So clearly there's some interest there. Nicola, a question for you. You were talking earlier about the move to or being an entirely remote company, and how that's kind of helped your hiring and actually get you better quality staff. If you could just share that.
Yeah, so Avatar, as I mentioned, we're a small boutique game supplier and we're fully remote. We don't have any kind of office space at all, which has been kind of, it feels very progressive in today's kind of world order. I know there's a lot of hybrid working and home working going on, but we are completely fully remote. It's been really a fantastic journey for us. We've got developers and people in Poland. We've got artists in Brazil. We have people in Malta. I'm based in the UK. And we're all doing this remote. And, having gone through COVID and, the situation there, it's actually just worked out really fantastically for us, and it gives us the opportunity to really, when we go out to look for people to join the business, we can take the best from the best. We don't have any limitations in terms of location. There may be some things that we have to do, around kind of local laws, etc., and not having entities as such. But the pool of resource that we have, and we use B2B contractors as part of the business as well. And they're treated as part of the Avatar family, so there's no real difference between somebody who's a full-time employee and a B2B member of staff. So when we go out to look for new people, for people to join the business, we've got a huge pool of talent that we look at. And it's also a huge draw because I think people want the flexibility. They want to be able to work from home. They may well have children or, for whatever reason. And one of the amazing things that our guys absolutely love and, is the ability to kind of take your laptop and work from anywhere. If you've got Wi-Fi, why not go and work, up a hill in Nepal if you've got Wi-Fi? There's no limitations there, and it allows people to go as well as working, but also kind of fulfill their ambitions in terms of travel and seeing family overseas, etc., etc. So it's really been revolutionary for us, and we found that with the advance of the kind of Google Meet and the technology that we've got, it makes it very seamless. We had an all-hands meeting last week with all 30 of us in the room, virtually, and it's still a really engaging environment. It still has its challenges, and we try to meet face-to-face as much as we possibly can, and coming to conferences is, a really great way of kind of really engaging with people and that way. But for us, it works very, very well, and it's something that we're not looking to change. Yeah.
Matt, let's talk bonusing. So obviously we've seen the last couple of years that the amount of free money available for new players, it was $3,000 for Caesars in New York a couple of years back. And nowadays it's $100, maybe $250. I think Bet365 at the minute is probably the most you can get is $365 in a couple of states. First question, is this bad news for affiliates? Is this hurting your business, this more, I guess, thoughtful bonusing by operators?
Yeah, I guess from a affiliate perspective, we're kind of, as an online media business, we're the bottom of the funnel, right? So just before people convert, they come through the game day. Not all of them, but a large portion of them, of American bettors, come through our site and then decide what operator to go to. Simple model. So to your question on bonusing, and it could be any type of above-the-line mechanic. So before they sort of hit our site and then decide to make a bet, whether it's advertising the back of a seat at an NBA arena, a bonus offer, a advert on telly, whatever it might be, all of that shouty noise that takes people from awareness to going online and saying, I want to make a bet, and then they land on our site, all of that noise is helpful to us. So if offers were 10 grand or 100 grand, that'd be even better because it's even more shouty. If adverts were only from our customers saying, go online and place bet, that would be wonderful. I'm not going to say it's not. But I think the piece, and we've discussed this a couple of times, that people forget is that we really chase and have, whether it's editorial or technology, to make sure we're bringing quality customers to the operators. And so let's say a customer is worth 5 grand. Let's say an offer is $500, well, 365, easy enough. Let's say they're paying us 365, easy enough. So $830 out for something that's worth $5,000 net to them. And so I think there's still a lot of room. And right now there might not be a lot of room because maybe there isn't a lot of funding coming into the market. So there's a bit of tension for new entrants to come in. It doesn't cost a lot to be a new operator and go into either sportsbook or casino. A lot of off-the-shelf products you can license, so there's fairly low barriers to entry. And secondly, there's extremely low customer loyalty. If we know anything from the past few years operating globally, there are thousands of operators, highly profitable operators, almost in every market in the world, except for the newest market, which is America. So I think to the offers question, we'd love it to be more. Truth is, customers are worth more than currently CAC is, so LTV to CAC is probably 10x. Most markets don't exist over 1.5 to 3.5 for very long, so something's got to give.
Yeah. So do you think bonuses could go back up? I mean, if a customer is worth $5,000, I don't know if you might know more about that than I do at the minute. Then you would think, efficient market bonuses might rise to get more towards that level again.
I think and we see this in notoriously in land-based casinos, right? They fly people in on private jets and put them in the penthouse. I've never had that happen. I'm more of a ice water and lemon guy rather than playing at the big table. So there's not a lot for that to subsidize that private jet flight, sadly, to Macau for me. But the idea that some bettors are worth that and some bettors aren't, I think is a little bit lost online sometimes. And so if you imagine our world of acquiring customers is totally dynamic. Some are worth spending $15,000 and continually writing, MLS content for. And literally, we're spending that money, right? Those writers are having to be paid for, that editorial is having to be paid for all day long if we think that that's where converting a very valuable customer will be, and we're getting paid for that customer by the operator. In the end, markets seem to settle on 1, rev share, and 2, pretty chunky offers.
Yeah.
And that's kind of just the way it goes. And so we have to share risk and cut our cloth accordingly.
Yeah. So do you think it's short-sighted from people like Caesars, BetMGM, Barstool, who have basically said no more bonusing? Like we're trying to make money now. Whereas on the other hand, you have FanDuel, you have DraftKings, who when a new state launches, they're still throwing money at it, going, as you say, our CAC to LTV equation, that's good for us. We're happy to invest now. So do you think it's short-sighted from some of those other operators who have cut back?
I again come back to cutting your cloth accordingly. If you can't afford to market, don't market, right? So somewhere in that organization, they've decided they can't afford marketing at a reasonable market level.
Yeah.
And so that's fine. Those businesses are kind of saying, let's consolidate, let's shutter things a bit. It's kind of indicative, probably, of the strength of their underlying company, versus good businesses can always raise money. And so if there is an accretive customer that you have to go and market for, no one's going to argue with that marketing budget if it's a fundable business model. And so I guess I don't really feel like it's a reflection on the industry so much a reflection on one operator's kind of internal agenda versus another's. And listen, capital's expensive right now. You mentioned some money coming into the market. I know that their IRR is above 15%, and that's expensive money at the moment. So if you're a big company like an MGM or Caesars and going, listen, we can raise, but it's 15% hurdle rate per annum, probably better to just go, let's sit and wait it out for a while till a few more states legalize.
Yeah, and someone like Caesars, as you say, it's about priorities. Like I'm sure they could find some money to invest in online sports betting if they wanted to, but I think they've gone internally. We can direct this 100 million to acquiring land-based customers instead, and we're probably going to get a better return on our money because our product there is better than our product here versus FanDuel, where they're eating our lunch a little bit on the product side.
Yeah, and there's somebody who's smart on the board saying that's irrational capital. Don't compete. And then that's perfectly fine if that's their agenda.
Yeah. And last question on this, on Bet365. I mean, it sounds to me, when we spoke before, that you're seeing them start to make some moves in some states and start to spend money sensibly.
Yeah, and I really like it when a global leader comes into a market with a rational approach. It really, for us, kind of puts a foundation beneath a lot of the comments I made here. If it was just a new name with, 5 or 10 billion to spend putting up poster adverts, probably we'd like the money, but we'd be really worried about the sustainability of it. But they are kind of the top dog globally, and when they come in with a very rational approach, they understand our model, and I've worked with them before in another organization prior to selling my business to Sky. I like their approach, they're thorough, and so it feels very real to me. And I think it also underscores really understanding what the post-tax LTV of a customer is. They're not going at all states with the same offer. They're saying, actually, here's a really tailored approach to the specific state where we know we can make money, and really taking a very thoughtful, kind of one step at a time play.
Yeah. It's been thoughtful and measured, and you see it in their market share just starting to creep up. I think Ohio, since launch, they're about 7% share, which it doesn't sound huge, but considering what every non-FanDuel and DraftKings operator is at, it is pretty good.
We're constantly looking at that pie chart.
Yeah.
And thinking about, if you go back a year, we're way overexposed to a single customer. You'd probably know who it is. We've mentioned it today. And then we started to think about, actually, in terms of our customer, like literally our audience, are we actually giving them the best product possible? Because they're really just funneling to one place because of extremely strong offers. And so we adjusted a little bit the editorial to say, actually, there's a variety, and for this reason you might consider this or that, and prioritizing different profile of customers. And it's much more balanced now. And that's really, again, where 365 is so handy, in that within the industry they're well respected. And there's probably, at minimum 5 or 6 still to come into regulated markets in the US. So that pie chart that really looks like 2 blobs right now, one red, one blue, is probably going to be more like a rainbow within 18 months.
Yeah. That's what you see in older markets, isn't it? Generally, that starts to spread out.
And back to offers, becomes more competitive.
Yeah. And then, so just quickly over on casino again. Obviously, a huge chunk of these customers playing casino now have been acquired via sports betting and then cross-sold into casino. For you as a developer, do you have to change the way your games are played? Because obviously, sports bettors traditionally, they're less slots heavy. They prefer table games. How does that affect your designs?
Yeah, so I mean, listen, there is that audience, the cross-sell from sportsbook, and I think player preferences are changing. As they have done in the European market, it was very heavily focused 10 years ago on sportsbook and cross-selling over, and would only play table games. But actually, that's not the case, and I think we're going to see the same in the US market as the audience matures as well. But you've also got this new wave of players who are kind of online first and who have different ways of playing than maybe traditionally. It's very much a snacking culture, with so much entertainment being available. As a slot provider, we're not just competing against other slot providers, we're competing against, online gaming and lots of other forms of entertainment, even, streaming channels and Netflix and, Disney Plus, etc. We're competing against those guys for players' time. And that's, why you have to kind of look at a differentiated product. You have to obviously serve that kind of more traditional market as well, of course, and that's what we try to do with our games. We're looking at what appeals to those players, but also with the new wave of players that we're seeing coming into, especially into the US market. We're also taking a lot of learnings from the European markets where we've been live for quite some time. We know what works, we know what retains players, we know that the types of games that we produce have a lot of action, and that's what people want, especially the new wave of players. They want constant gratification all the time. So that's the kind of, one of the ethos that we're trying to push forward with our content. As we start to roll it out in the US. But I wouldn't say that we've got it nailed. We're not live yet in the US market, and there'll definitely be a lot of learnings. There'll be a lot of player feedback that we'll gather. There'll be operator feedback that we'll gather to make sure that we're refining and honing our games to make sure that they are resonating with the player base. And again, it's something that we're taking our learnings from the markets we're already present in and adjusting for the US market. So that's, we want to make sure ultimately that we're providing the games that players want. And the appetite for content. I was in New York in May. I was speaking to the likes of BetMGM and Caesars, and the appetite for content is fantastic. It's the enthusiasm there is second to none. And we've having been in the European market for a long time, and the regulations and things that we have to go through to get content live, we're not quite there in the US, which makes it, people just want content, and being an early adopter into that market as a supplier is really key to the growth.
Cool. Right. Well, I think that is all we have time for. So I'll wrap it up there. Thank you to both of our panelists, Matt and Nicola.
Thank you.
Thank you.